Think we're live. Hey, good morning. This is Dawn Klevesahl with Stress Free Bookkeeping and Profit First Professionals. I'm so glad that you guys are able to make it today. This is an Intro to Profit First course. I am broadcasting into YouTube channel, but also into the Facebook group. I felt like this is really a good time. We have almost 500 members in the group. I thought it was a really good time for us to do kind of an intro to Profit First so that I can see where you guys are. You can kind of I don't want to assume that I know where you are in your journey with Profit First. And I know some of you have worked with me already, so you may be a little bit further along, but this is really an introduction to the core concepts of Profit First so that you can run your business with these systems and also learn a couple of ways that I can help you if you're getting stuck in some of the areas. If accounting isn't your forte, it isn't your thing that you're used to and love, the good thing with Profit First is you don't have to be an accountant to do Profit First. It does work with whatever you are already doing in your business, so that's lovely, right? But also, I do have an accounting background, so if I have any questions, I can usually think a little bit outside the box of maybe where we would normally think as a business owner. So let's get started. I know we have at least one person on, and there will be a replay. I am streaming using StreamYard. I wanted to mention, so if you're not registered with StreamYard, I won't be able to see your name if you're asking questions. So I'll probably just, after we're done here, I'll pop into the group and where I'll be able to see your name and I'll answer the questions for you there. But the first thing is, it's your business. Shouldn't profit come first? Of course, the answer is yes, yes, yes. We want our profit first. Let's see. Okay, so the problem is, we're working with a broken formula. So in accounting, the formula is your sales minus your expenses equals your profit. So if you've been in business for a while and you've looked at any of your financial documents that you get from your professionals, you'll see, we call it either your income statement, we'll call it your profit and loss statement. And that is the form that has this formula on it. Has your sales at the top, you got this big group where all your expenses come out, and then you have your profit. But out of the 28 million small businesses in the US, 22 million are break even. They're using this formula, right? And they're breaking even. They're spending everything that they're making. Now, that's a horrible way to run your business, but it's the way we've done it for ages. It's the way that you're taught. If you're focusing on your sales and your expenses and you're not focusing on profit, you are going to be spending everything that you're making. So accounting just focuses on the numbers. It ignores human behavior. And I can tell you, with all the clients that I've worked with over the years, human behavior is a big deal. If you're not going to address that, if you're just going to say at the end of the year, hey, look, you made this much money and you owe this much taxes, that is a terrifying moment for most people. I know it's been terrifying for me. And usually the bummer is it's in the years where you've done amazing, right? You've worked so hard, you made all this money and you're so excited, and then next thing you know, you have this huge tax bill because nothing in the business world that we're usually trained to, nothing addresses that issue of what you're doing with the money impacting your business in a negative way, right? So we think, oh, we're grow, we spend, we're doing great, we have all these sales, but if you're not having any of the profit left over, well, it's not great for you. So lessening human behavior. So Parkinson's law, this social scientist came up with this law that the demand upon your resource will match the supply of that resource. Now, we use toothpaste as an example because we all know that when you get that tube of toothpaste for the first time, you get that big, nice big swipe, just like the TV commercial, it looks pretty on your toothbrush and you brush away. But as you get down to where it's really low, we get very innovative with how we get the toothpaste out of this toothpaste tube once it gets low. And that is Parkinson's law. Our demand upon the resources will match the supply of that resources. So when it gets lower, we're using a lot less than we may have been using at the beginning. And that works for time and money as well. Those principles are across the board. What most business owners do is bank balance accounting. While we know we should be looking at those financial statements, I can tell you just from all the financial statements I send out every month that most people don't look at them at all, ever. It was very sad for accountants. But it's because you're busy and you don't necessarily even understand what that paperwork means. But if you look at your bank account, you know what that means. There's money in there, right? So we're constantly checking our bank balances, see how we're doing. Well, Parkinson's law dictates that we will consume what we see in those bank accounts. And that's probably what you've been doing. It's what a lot of businesses have been doing. In fact, before I started my own business in 2007, I was working for this big company, and it was so frustrating being the bookkeeper because we would do amazing business, amazing sales, and millions of dollars would be flowing in. The next thing I know, the account's empty. I don't have anything to pay our vendors because the business owner saw the money in there and said, "Yay, profit," and took it all. He would never leave anything. Anyway, he was a really wonderful guy, but it was like so frustrating to work with someone. It didn't have the core concept of, yes, you need to pay your vendors. So we don't want to just look at our bank account balance and make our decisions based on that, whether it's to take all our profit, whether it's to throw all that money back into the business to do stuff, right? So if you take your profit first, your natural behavior of checking the bank balances actually becomes an asset to you. Your operating expense account shows the actual portion of all of those sales you have to spend. And that's what we want. We want you to be able to look at your operating expense account. You know already that you've set aside for profit. You've set aside to pay yourself. That's the owner's pay. And you've set aside for taxes. So you're going to be more innovative like we were with the chief payroll, and you're going to use what's in that account to run the business. And that may mean you take a look at it and you don't have enough money to pay things. That's a really eye-opening moment for a lot of businesses, but it may mean you're just overspending, or sometimes we do subscription programs and things and we don't realize we've been paying $27, $50 a month out for certain things. So one of the nice things about setting up this system where by looking at your operating expense what you're working with, it really gives you that moment to step back and say, okay, am I really needing to spend the money where I'm spending it? The fix, of course, is to take your profit first. Always, 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 right? So Parkinson's law becomes a wonderful ally for you when you are forced to grow your business on the remainder of what's left, instead of being forced to try to run your life based on the profits that are left over. As we know, and we mentioned before, that money just doesn't exist. It always gets shoveled back in. So that's where taking your profit first is just wonderful. And then in the past, you only had that profit left over. And at the end of the year, when your tax accountant says, "Hey, you made $40,000 and all you have is like $50. It's like, well, that doesn't make sense. It doesn't even make sense to you, right? It's not a reality. Right? So now with the bank balance accounting, we're going to be highly effective. It's a tool that manages your finances. Historically, this method, you might have used it if you've worked for a corporation or anything. This is where your 401ks come in. So it's the idea that's been around forever of paying yourself first. You've even heard this with your savings. When your paychecks come in, put a certain amount into savings straight away so that you have that money. And again, the 401ks work the same way. So it is a familiar concept to you. But also I wanted to point out in this section here, where now we're using we want to switch this. We want to use a different equation in profit first, right? So we're doing sales minus your profit equals your expenses. And you'll remember the original one was sales minus expenses equals profits. And I'm going to mention something here because I don't think I did a slide on it. We get what we focus on. So when we are doing the original formula where it's sales minus expenses, we're focused on expenses a lot, like really a lot, So that's what we get more of. So with profit first, we're taking that step back. We're going to focus on profit, which leaves a smaller amount for your expenses, like I said, but that leaves you room to be innovated and actually have a business that's paying you, a business that maybe you're working long hours still, but maybe now you can take your spouse, significant other, your children out to do something where before all of that money was just getting sunk back in. So I just wanted to sneak that in there. So profit first works because it helps you establish necessary habits that can make you become profitable. So with the core thing, actually, I'm going to step back and tell you this story. It's from the beginning of the book, but in case you haven't read it. So when Mike was in business early on, he was doing amazing. He's got all these companies and he thinks he's doing great. And he was able to sell one of his first companies for a lot of money. And so he thought, well, gosh, I created this business and I'm amazing. These are his words. I was so amazing at selling this business. I'm going to become an angel investor and help all these other companies in their business. So he started like funneling money to other companies and doing all these things. Well, kind of crept up on him over the years. He realized one day, I don't have the money to pay my bills right now. Like he had so much going on. Again, he had money coming in and money going out. But this is where he tells the piggy bank story. He said that on Valentine's Day, it's kind of like Thanksgiving for their family. It's a big deal. So they have a big dinner, they get together and they do this thing. And he was so upset because that was the day that he realized that he didn't have any money and that things are going to have to change for their family. And so he was telling his family the story. Okay, well, this is how it's going. I spent all the money. I mismanaged everything. And now there's nothing. And his 9-year-old daughter just ran off to her room. And he's like thinking, well, I'd run off too, because, you know, this is just horrible. And I can't believe that I've done this to my family. And she comes running back with her piggy bank and she hands it to him and she tells him, Daddy, it's going to be okay. And hands him the money. And I could tell you the first time I read that, so it was like the first time I've ever cried over a business book because it was just, I think we've all been there in one way or another in our business. So that is where he comes from with that passion to make sure that you're profitable. And I share that passion because I've seen so many businesses that come to me when it's too late to pick things up. It's too late for them to get started. And I don't want that to happen to you. So we're going to start with the small plates idea. So after everything fell apart for him, he was sitting on the couch, middle of the night, eating Cheetos, watching infomercials, and this fitness program came on. They were talking about diet programs and how they eat. So that's where the concept of small plates comes from. So what the person on the thing was saying is that the size of the plates has grown over the years, and the size of the plates allows you to have more food on your plate. So in the diet realm, by using a smaller plate, you're able to control how much you're putting in your body. So he's had his eureka moment, and that's where this comes from. So your income account, that money, the one that has all your money coming in, that income account is your serving tray. That's like your Thanksgiving, your turkey's on there, you've carved it. You don't just have everyone dig into that tray. But traditionally in business, that's what we do. The money comes in, we've got money coming out all over the place, and just eating up and leaving a disaster mess of this turkey on the plate. So with our first principle of Profit First is to use smaller plates. And that is where your profit account, your income account, your owner's pay, your taxes, and your operating expenses. Those littler plates are going to be fed by your income plate. So step 2 is to serve sequentially. And that's what you'll hear us say, profit first, profit first, profit first. It's because we want you to fund that account first. I also want to mention, because this is, I find a confusion with people that I talk to. While we will use some of the profit to benefit you as a business owner as a bonus for running your business, that is the business profit. So we are building a profitable business that's going to be able to pay you. So when we say profit first, we want your business to take its profits first. That's why if you'll see the next thing we have is the owner's pay. Those are two different things. Owner's pay is what you're paying yourself every month. The other money, your profit account, actually is going to serve a couple different purposes. First off, you are going to be able to give yourself a bonus out of that account. Every 3 months, half of that is available to you as the business owner. But the other half, what about that? What is this other half for? Well, the other half, in most cases, if you're just starting out, that other half is to create a nest egg. That's to create that emergency fund. And like I said, as you go through the book, it gets more complicated and more complicated. I would say just stop at chapter 6, just because that's where you're going to, the first 6 chapters are where you're going to get like your core information. So it doesn't get too complicated for you. But serve sequentially. So what that means is we're going to always allocate based on the percentages that you figure out and to these accounts first. Profit is always going to get its distribution first. Your business made a profit, it's going in that account. 2, your owner's pay. You're going to pay yourself, so that money goes into that account. 3, your tax account, because we got to pay the government for running our business. And then the remainder is into your OPEX account. Step 3, remove temptation. And this is a part where I get so much pushback from people. So if this is you, just try to be open-minded. This system works when you follow it. So if you are stubborn, and trust me, I can be really stubborn too, and you feel like, oh, these concepts are easy, I'll just kind of pick and choose which ones I'll do. If you do that, you're not doing profit first. That's just pretty much what it comes down to. You're using some of the techniques, but if you want to do profit first and you want to establish those habits that are going to make you profitable, you really need to follow the system exactly. So what is remove temptation? Remove temptation, especially with the profit account. You want to have a profit account at a separate bank so that you can move that money and have it so that you're not looking at it. You're just hiding it from you, right? So we don't want to be tempted to steal from that account and move money somewhere else if something seems tight, or we just don't want to spend that money. And the other one I do that with also is the tax account. So the profit in your tax account, I have what's called a profit hold and a tax hold account at a different bank, so that when I log into the bank, all I see is any income that came in, my owner's pay if I haven't distributed it to myself yet, and the operating expense account. That's it. Everything else goes to the other bank. But wait, well, I haven't told you this yet. With the 5 accounts, why do I need these 5 accounts at one bank? We'll go into that a little more. But these first 5 accounts that we talked about, the income, profit, owners, pay, taxes, and OPEX, are at one account where they can talk to each other really easily. So if I'm taking money from my income account and putting it into the profit account at my core bank, that happens right away inside of their online system. It's like, boom, it's gone. So I can show 0 money in my income account at that point. If I were to try to take my profit or my tax money and transfer that out to another bank just that I'm hiding it at, what would happen? It's going to sit there in the income account. It's going to look like I have money coming in that's already actually been allocated. So it's really for your benefit to follow the system the way that we laid it out. So step 4, enforcing a rhythm. So you want to do your allocations and payables twice a month. Mike recommends the 10th and the 25th. That's because a lot of bills are due on the 15th and the 30th or the 1st of the month. So establishing the rhythm to your cash flow so that you feel in control, so that you are in control of what's happening. You don't want to just, let it build up and then randomly pay stuff out. That's kind of the rat race we're trying to get out of in the first place. So if you can set it up, most places, even if you're on electronic transfers, you can either contact them and have them change the date, or you can look at your account and say, okay, well, if it's between the 26th and the 9th, that money gets funded from the 25th or something. So anyway, it's a little more complicated than I want to get into right now, but there are ways to do that. I just want you to be committed to really doing this process so that you can be successful. What are the steps to getting started with Profit First? So I jumped ahead a little bit, I think, on this slide. So step 1 is to open those 5 core bank accounts, right? So that's your income, your owner's pay, taxes, and operating expense account. They should be checking accounts at the same bank with the ability to transfer between them. And most of the banks, which is totally awesome, you can, in their online system, you can rename all of the accounts to match this system. So that's really one of the lovely things about online banking nowadays, is you can change the account to say income, the other account to say profit. It just makes it so much easier to do this inside of your accounting. Step 2, if you already have a primary bank account, you need to decide if that's going to be your income account or your operating expense account. What does that mean? Well, if you've been running your business from that big plate, your big turkey plate, you already have money going in and money coming out of that account. So really need to decide what is easier. Is it easier to contact the companies like Square and Stripe, whatever your merchant processing system is? Is it easier to contact them and just change the banking information? Excuse me. Or is it easier to switch all of your electronic debits and whatnot over to a new account? I would say in most cases, this ends up becoming the operating expense account, just because you already have all of those little bits and pieces coming out. And if you've ever lost your debit card and had to change all of your electronic banking and electronic transfers and payment things, it can be a really big hassle. So in most cases, if you're working with a merchant provider where it's easy just to send them a form and say, hey, change this, I have a new account for the income account, that's going to be easier, but that's something that you're going to need to decide to see which works best for you. Step 3, just to make Profit First really simple, once you get your account set up, you're just going to look at what's in that main account that you've been using. You're going to want to subtract out anything that hasn't posted yet. So if you have checks you've written that haven't cleared yet, but then you're going to take that amount, take 1% of whatever that is, and transfer that to your profit account. See, you're profitable already. We've got Profit First kind of in motion just by setting up these bank accounts. And then we're going to move forward a little bit into more of the nuts and bolts where people get a little bit more confused about using Profit First. So Instant Assessment 101. So an instant assessment is a form that Mike made up to make it really quick and easy for you to kind of just throw your numbers in there and move, kind of get started with Profit First. It's not meant to be an in-depth assessment, although I do a lot of in-depth assessments for people. This tells you how to fix the current situation that you're in. So at the end of the end column, once you've filled in all the detail, you'll see that there is something called fix. And that really just tells you, are you going to increase, decrease, or maintain the way that you are currently spending? So there's a chart in the book that talks about your target allocation percentage. That is an industry chart that Mike came up with by interviewing a lot of different people in different industries. You'll see it goes by how much you make per year. I believe the first column's like if you're between 0 and 250,000 a year. These are kind of the goal for you to use in Profit First. It's your target. But what the mistake I see people making, what I don't want you to make, is that they are using that as their percentages. So of course it's easier, right? Because you don't have to fill out any of the other paperwork. It's very easy just to look at that chart and say, okay, this is what I'm going to do. However, if what you've currently been doing is drastically different from that, which in most cases it is, you're not setting yourself up for success. It would be like if you were a couch potato, you hadn't gotten much exercise, and then you're suddenly going to be running 5 miles a day. Instead, you'd be much more successful if you were just going for, a half-hour walk or something, just to start out, or smaller even than that if it's something that's not your goal. So we really want to make sure that you're not trying to use that target allocation percentage chart as your chart. Again, I understand the appeal. I understand that it looks very easy to do something that way, but I can tell you that it can set you up for failure. So to get started with filling out your instant assessment, that form is on page 62 of the book. It's figure 3. And then the next, 10 pages are just the instructions that you need to follow in order to fill out that chart. And he gives you it line by line, so it's pretty easy. However, because it's so much financial data and so much information that you might not be familiar with, it can feel really overwhelming. And if it is, and you need to step back, give yourself permission to do that. I can tell you, once we got past chapter 6 and it's getting into all the different scenarios where you can change Profit First and maybe do it this way, maybe do it that way, maybe do it. It was just like mind blowing, too much input. So at any point, if that's where you're feeling with this, just give yourself permission to stop. But at the very least, do want you to make that 1% transfer of your available funds into your profit account, or Profit First, but into your profit account, because that's going to give you that first taste that this can actually work. I have clients who started out that way. We had talked about Profit First. They knew that's what I was doing. We hadn't done any assessments on them yet, but they just decided to start putting 1% of everything they made into that profit account. And then a few months later, when they went on a trip, they were able to get a hotel room for a night they wouldn't have normally done because they had that money coming in. So this works. I want you to be successful. So at the very least, do small steps that feel comfortable to you. And in this case, do that 1% transfer. And it's just a really good way to get started. Here are a couple more concepts from the book that tend to get people lost, so I did want to bring them up. There's caps and day one 101. So your caps are your current allocation percentage. So the chart I talked about, that was your target allocation percentage. This is your current allocation percentage. And what does that mean? That means this is where you are now. So if you filled out your instant assessment, the very first column on your instant assessment are the numbers that correspond to where you currently are. So you're just going to use that to figure out what your current percentages are. And that's, of course, a percentage of the real revenue number, which you already have on that form as well. So that's where that's going to come from, because I think that gets a little bit confusing. So once you've done your instant assessment, it does tell you whether you need to go up, down, whether you're maintaining, you're doing really good, that's where you should be. But then from there, you want to figure out what percentage of our real revenue is profit. Now, in most cases, it's going to be zero. If you're just starting out with Profit First and you've never actually had the business pay you anything as a bonus, that's going to be zero. So that really does make that easy. And then the same thing for owner's pay. If you haven't been paying yourself, that's going to be zero as well. If you have, then you can just kind of figure out what percentage that'll be. And then we just kind of go from there. So in Profit First, we want you to go slowly too. I don't want you to get bogged down with any of this. So we really start out, because you're going to hear me say, so you got day zero, which is your current allocation percentage, but then day one are the numbers you're going to use going forward with Profit First. And you really, I'm going to see if, I don't know if you can see my cursor, but yeah, right here. So add 1% to the profit. So if it's currently zero, it's going to be 1. 1% to owner's pay. If that's zero, that's going to be 1. And 1% to taxes. So if you haven't had the business pay the taxes for you, that number would be a 0 as well, and you would add this 1%. So in most cases, those three things really to do. So be screen share to stop. Okay, I think we're back. Sorry about that. I don't know what that was. So, and the new percentages you'll use when doing your allocations. So read chapter 5, that's where this information is. Those are what you're going to use for your day one to do your percentages. So I just want to talk a little bit about how I'm different than everyone else. Obviously, I just gave you a bunch of information to think about. So this will be in the group, so you can go back and watch it. You can pause it, things like that you can't do when we're doing a live broadcast. But I understand that taking this simple concept and implementing into your business can be confusing and that you may need help. I'm never going to look at anything that you're trying to do and tell you, oh, that's easy, because I understand that what's easy for one person is not going to necessarily be an easy concept or something for someone else to understand. So my goal is to make it easier for you to set up Profit First in your business. I'm going to give you as much information as I can for free in the group. I do have paid programs or paid coaching just for people who need like that extra help, or they're ready to really dive in, but they just can't get past some of these ideas and concepts. I work with and have been directly certified by Profit First Professionals, that's Mike's organization, and follow his method. I'm constantly on training calls with Mike and his team. We're learning new techniques. If there's something that you come up with that isn't something that I have experienced, someone on my team has, so we are really good at getting you answers. How can I help you with Profit First? So there's a few different things. I can set it up for you. That's always the fun part for me. So my signature service is the Perfect Profit Plan. That lets me look at the last 2 years of your business information, something that could be a little bit overwhelming for you. And we use that to create your perfect profit plan. So using your own information and my experience with implementing Profit First, I'm able to give you a detailed report that tells you everything you need to do to get started with Profit First as your cash flow tool. And it even gives you like a chart that tells you if you want, if we talk about how you want to progress, like, so a year from now, you kind of know what your percentages are going to be then as well. So it's really a fun thing for me to do for you. It takes all of that weight of trying to figure out all this stuff off of your shoulders. And I'll try to post the information about that in the group. The other thing I have is that you can set it up with my guidance. I made a course called Profit First Made Easy. A few of the members in the group have been through that already. And that series actually walks you through, I think it's chapter 4 or 5, where it gets really like, what numbers and whatever. So I talk to you really in detail about how do you need to get your numbers? What, I try to break it down, right? So I say like, okay, fill out this sheet with your numbers so that you're not trying to look at a balance sheet, a profit and loss, whatever, to fill out your form. I really just lay it out. Okay, this is where your profit comes from. Do you have these? If you do, put them here. This is where your income, your owner's pay comes from. If you have those, put it here. I try to make it really simple for you. And then we walk you through the instant assessment. Then I walk you through calculating your caps and walk you through having those day one percentages. And my favorite part, something that I use for myself, I give you an Excel sheet that all you have to do is change one of the cells in the Excel sheet to the amount that's in your income amount, and it calculates all of the percentages for you. So again, I use that in my business. I love it. It just makes it simple. I don't have to try to, calculate each percentage each time. I just plug the number in there, and then I can just do my transfers, and I'm done in like 5 minutes. So that's something I have for you. Also, I have a paid Facebook group that's more in-depth coaching. So that's weekly coaching calls. And if you have more in-depth questions about Profit First that just aren't related to the basics of Profit First, which is what this Facebook group is about, I'm able to answer those more detailed questions in that group. And then this one's really exciting. This is something that I include when I do my Profit First Made Easy class. It's in a video series that Mike created. It's one that he uses to train Profit First professionals like me. It's one of the very first things they have you look at and do is this video series. And I know that other people are charging like $195 a month for access to it, but I want you to have it. I think it's so important, especially from all the feedback I've had from, like I said, there's almost 500 people in our group right now. All the feedback I'm getting is that people are confused. It's really what it comes down to. You got some of the concepts, you got others, some of the concepts are getting mixed up. So this video series by Mike is really cool because it gives you that opportunity to hear him, he's a wonderful speaker, explain the core concepts of his own ideas to you. And it's broken down. There's one lesson on there that's an hour long, that's like front to back, but then the rest of the things on there are just really small little videos so that you can hear from him about every little concept in Profit First. So if that's something that you want, that is in the Facebook group already. I'll try to post links to all of these things. So if you have any questions or anything, let's see, I'll see if I have any questions. I don't right now. So if you're watching the replay, please, put replay and then put your questions, and I will get in there and answer those for you. And I see that Liz said, hello, Don, thanks for this info. You're welcome, Liz. I'm so happy that you're able to catch this live, and I hope that I answered most of the questions that you are having with Profit First. Like I said, I know that there can be a lot of confusion, especially for some people. It's been a long time since they read the book. So they've read it, they really like the idea of it, but then implementing it can be a really big hassle. So thank you so much for being here, and have a wonderful rest of your day.